I'd like to introduce Oliver Weber, who has joined us, the CEO of CREALOGIX. Oliver, very good to meet you. I'd love it if you could please introduce CREALOGIX.
Yeah, thanks for the opportunity and thanks for having me. CREALOGIX is a global fintech headquartered and founded here in Switzerland. We were the pioneers of digital banking in this market 25 years ago. And today, we are a global fintech focusing on front-end solution for digital banking. Our products are designed to improve the customer experience. We serve more than 500 customers worldwide, generate 100 million Swiss francs in sales, and have a team of 700 people. Our offering is unique. It combines 25 years of experience and a digital platform technology which cannot be found elsewhere.
What do you see as the principal drivers of growth for your product offering for digital banking?
So there is a number of drivers for growth in the digital banking space. I'd like to name three. Number one, it's the demand for an improved customer experience. An increasing number of consumers are demanding today from their incumbent banks a better customer experience. An experience which is more like the experience they have with other technology companies or social media companies. And that's why, for instance, neobanks are so successful, because they have a mobile-first strategy. They are focusing really on the customer experience. And that's why the neobanks are winning so many customers in a relatively short time frame. That's why the incumbent banks have to improve their offering. They have to improve the digital experience of their customers, and that means they have to invest into front-end solutions, which are not only publishing in the front end a standalone solution, but it has to be a fully integrated solution. And CREALOGIX, with our digital banking hub and our integrated front-end solutions, are very well positioned to benefit from that demand. Secondly, I call that the technology debts of most of the banks. Every bank has a technology stack which is somehow not integrated and kind of outdated. Many banks have a desktop solution for digital banking. They have multiple apps, and many also have a portal. But in very few cases, all those different solutions are fully integrated. And that causes a dilemma, because surely banks would love to have an offering, an omni-channel offering out of one hand, which is fully integrated, where changes don't take too much time and doesn't cost too much, but that's simply not the solution. So they're looking for a technology provider who can complement the solutions they have in place. And CREALOGIX, with our digital banking hub, we are capable of complement the existing solutions of the banks. We are offering technology with which the banks can improve their front end by themselves, integrate solutions from fintechs, or use CREALOGIX to build new solutions for them. Thirdly, I'd like to name a third driver for growth in that space. The competitive landscape for incumbent banks is changing significantly. Neobanks are penetrating the markets. They are offering today between 1 and 2 products, but that will change. Neobanks have built up a huge customer base, and they will expand their offering to what I call up to 5 products in digital banking. And that will put the margins under pressure of the incumbent banks. So the banks will have to adjust their prices and their offerings. And that again will put pressure on the operating costs. CREALOGIX offers SaaS solutions with which banks can reduce their operating cost and make up for the margin slippage they will be suffering from by reducing the prices for their solutions. Those are, in my eyes, three main drivers for growth in the digital banking space.
I understand the business, and I think you just touched on it. I understand the business is moving from a license model to a SaaS model.
Yeah.
How is that transition going? And when do you expect investors to start to see the benefits of this transition?
We have been transforming our company for the last 2.5 years. And we took a, I would say, step-by-step approach. But since January 2020, we have increased the speed of that transformation. For instance, we have streamlined our offering. That means we have consolidated our broad product portfolio from more than 40 products down to 20 products. We are now further consolidating that offer. We have doubled our sales force globally, and we are now doing business in 4 sales regions. So it's also a consolidation of various markets. We have realigned our offering according to the 3 segments we are acting in. That's retail, wealth, and corporate banking. And we have also announced a reduction in force of 10%, since we are seeing already positive benefits of the transformation in terms of we need less capacity to generate the same amount of revenue. Of course, a SaaS transformation has an impact on top line and on bottom line, and our investors have been seeing that. However, with what we are planning now is we are increasing our annual recurring revenue from today 44% to 60% until 22-23, our financial year 22-23. We're increasing our SaaS proportion from today 17% to 30% in the same time frame. And in terms of double-digit EBITDA, we will be at a run rate at the end of fiscal year 21-22.
I'd be very interested to hear about a little bit more about your international strategy, and why I think in particular you're targeting EMEA and Asia Pacific, particularly over the US opportunity.
Yeah. Already today we are generating 60% of our sales outside of our home market, Switzerland. We are basically growing in all regions we are doing business in. However, we are growing faster in Middle East, Mediterranean and Middle East, and APAC. There's still a lot of growth potential in Europe for us. So currently our main market is Switzerland and Germany. We have not yet started to do business in the adjacent market like the Benelux, the Nordics, etc. So there's still a lot of growth potential in those markets, which are right at our doorstep and which offers very nice opportunities for growth. However, our strategy is global growth. We have invested into our organization in APAC. There we have grown with our customers who are already established in the market and have asked us to come and help them grow in those markets. So that's a different situation than we will see in the United States, where we have a target on the horizon when to go to the United States, but at the moment we are growing in Europe and in Mediterranean, Middle East, and APAC.
Finally, I just wanted to touch on the competitive situation. So CREALOGIX is a relatively small company taking on much bigger competitors. How do you see your prospects for the future of the business?
I think we are very well positioned in the market. We have a unique value proposition. Number one, we are focused on front-end solutions in digital banking, and we can connect to any core banking application. We serve banking only, and we are specialized on retail, wealth, and corporate banking. We are not a core banking provider, and we are not aiming to become one, because our play is in the front end. Because in the front end, it will be decided in the front end whether banks win new customers, lose their customers, or can increase the share of wallet. And that's the place where we play. It's also when I think about our 700 people, they're not only technology experts, they are experts in digital banking, and the combination of digital banking and technology makes a unique positioning for us. As when I look to the prospect, we will expand our business, we will grow organically and through acquisitions going forward, as we have done in the past. However, the acquisitions we will be doing will be more to complement our technology stack or to penetrate a new market. The transformation to a leading SaaS provider for digital banking will also improve our profitability. And with our expanded partner offering, we will penetrate new markets as well. As you know, we have recently signed an agreement with global IBM. We are using them as a reseller for our products, and at the same time, IBM is planning to host our products in their financial cloud.
Oliver Weber, CEO of CREALOGIX, thank you very much indeed.
Thank you very much.